Now let's learn certain accounting equations which is needed for your final exam. So I have named it as extended accounting equation. Actually from this particular video we are going to study 6 accounting equations which is needed for you in order to do accounts. So the first one is net asset is equal to equity. For the equity there is another name that we can use, it is capital. So let me show you how we can create this particular formula. We have learned assets equals equity or the capital plus liability. So this is the basic accounting equation that we have learned. So in this one I would like to take this liability other side, then asset minus all the liabilities, total assets minus total liabilities, it is equal to equity. Total assets minus total liabilities, there is another name that we are using. What is that name? Your total assets minus total liability, there is another name that we are using, it is your net assets. It is your net assets. So total assets minus total liabilities, your net asset. So here see, net asset is equal to your equity, if not we'll call it as capital as well. So this is how you can construct this particular equation. So here I have given you an equation. I am not just giving you the equation to remember, I am giving you the explanation how we have actually created that equation. Net asset equals equity or the capital. From the basic accounting equation, if you take liability other side, then from the total asset, if you deduct the total liabilities, you will get the net asset. So your net asset is equal to what? It is equal to your equity or capital. So for the equity or for the capital, there is another name that we can use. What is that name? You have to remember, it is net assets. And the second equation that we are going to study, it is net current asset. This word is very important. Net current assets are equals total current assets minus total current liabilities. So very simple formula. What is this net current asset means? It is not net asset. Keep that in your mind. This is net current asset. Net current asset means what? It is total current assets minus total current liabilities. For the net current asset, there is another name that we are using. We will call it as working capital also. So you should know these terminologies. For the net current asset, we will call it as working capital also. If not, the abbreviation will be WC. Then the working capital is equal to your total current assets minus total current liability. So very important thing that you have to understand, if your total current asset value increases, what will happen to the working capital? So let me take an example. I am going to do an example, very important for you. I am telling you, currently my current assets are 100,000 US dollars. My current liabilities are 50,000 or 60,000 US dollars. Okay. Then how much is the working capital that I have currently? It is 40,000 US dollars. So what is this working capital means? Working capital is the capital or the fund that you have to do your day-to-day operations. Okay. So how much is your working capital here? 40,000. Now I am asking, if this 100,000, if it becomes 150,000, what will happen to your working capital? So if this 100,000, if it becomes 150,000, the working capital will be how much? It will be 90,000. It will be 90,000. So what you have to understand, if your total current assets, if it increase, okay, if it increase, what will happen to the working capital? Working capital also will increase. Okay. And let's take other way around. Let's assume this working capital is reducing to maybe 90,000. Okay. If it reduced to 90,000, this total current asset is reducing to 90,000. If it reduced to 90,000, the working capital will get reduced to how much? 30,000 US dollars. So what you have to understand, if your total current assets, if your total current asset decrease, what will happen to the working capital? Working capital also decreases, working capital also decreases. Then if you see these two particular situations, there is a what kind of relationship? One-way relationship. That means there is a positive relationship. Here if your current asset increases, working capital is increasing. If your current asset decreases, working capital is decreasing. That means one-side relationship, one-way relationship. So if it is a one-way relationship, what you have to understand, it is a positive relationship. Then what you have to understand, between your current asset and working capital, what kind of relationship is there? There is a positive relationship. That means one side relationship is there. Now let me take another example. Let's see, I am telling you my total current asset is 100,000 US dollars. Total current liabilities maybe 40,000 US dollars. Okay. Then how much is my working capital? Current working capital I am getting, it is 60,000 US dollars. Okay. I am asking, what if this current liability, this is your total current assets minus current liability is your working capital. If this current liability increase for 50,000 US dollars, what will happen to your working capital? If it increase for 50,000 US dollars, your working capital will decrease to 50,000 US dollars. So what you have to understand, if your total current liability, if your total current liability increases, what will happen to the working capital? Working capital will decrease. Now let's take another example. This is going down to, your current liability is going down to 20,000 US dollars. So if it goes down to 20,000 US dollars, what will happen to the working capital? Working capital will go up to 80,000. Then what you have to understand, if your total current liability, if your total current liability decreases, what will happen to the working capital? Working capital is increasing. Now if you look at the relationship between current liability and the working capital, is there is a one-way relationship? No. When the current liability increases, working capital decreases. When the current liability decreases, working capital increases. So there is an inverse relationship. There is a two-way relationship. So what is that? It is a negative relationship. So this is something very important that you have to remember. What is the relationship between current assets and the working capital? If the current asset increases, working capital increases. If it decreases, working capital decreases. That means one-way relationship is there. That means positive relationship is there. If you take current liability and working capital, two-way relationship. If one increases, other one decreases. If one decreases, other one increases. That means there is an inverse relationship. Inverse relationship means what? It is a negative relationship. So this is something very important that you have to remember. The next formula that we are going to learn, it is net assets equals non-current assets plus working capital minus the non-current liability. So actually, how did I create this equation? So let me explain it. I am not just teaching you the equation, I am explaining how I created this equation. So listen carefully. We learn your net assets are equals, your net assets are equals, it is the difference between total assets minus total liabilities, minus total liabilities. So this is what we learn for the net asset. If I go to the equation number 1, here see net asset is equals, if not net asset is your equity, no, it is asset minus liability. Okay. So if you take this total asset, what you have to understand, total asset is combination of two things. What are the two things? One is non-current assets, long-term assets. Other one is current assets, short-term assets. And if you take the total liability also you have two things. What are the two things that you have? One is current liability, other one is non-current liability. So what you have to understand here, your non-current assets plus current assets minus current liability minus non-current liability, what you will get? You will get the net asset. If you take these two, what is this? Current assets minus current liability. So we learn here, Current assets minus current liability, it is your net current asset. If not another name that we are using for net current asset, what is that? Working capital. So this part is what? It is your working capital. Then non-current assets plus working capital minus non-current liability, you will get what? You will get the net asset. If not for the net asset, another name that you can use, it is your equity. If not another name that you can use, it is your capital. Everything is same. So if your net asset or your equity or your capital, how to calculate? Another method to calculate this one, it is your non-current assets plus working capital minus the non-current liability. So that is a very important formula that you have to remember. The next formula that we are going to learn, it is closing assets are equals opening equity plus net profit minus drawings plus additional capital plus closing liability. So if you come across with a formula like this, you will not understand for sure if you don't know how they have created this equation. So let me explain you how we have created this equation. Listen carefully. If you take in your accounting equation, you have studied assets are equals equity plus liability. So let's take it as closing assets. Closing assets are equals closing equity plus closing liability. Okay. So here I am taking the closing asset, okay, closing assets equals, how to calculate the closing equity? There is another way. Actually we learned that method in sole trader account. For the opening equity, you have to add the net profit because profits will increase the equity, and you have to deduct whatever the drawings means your goods drawings and cash drawings, and whatever the additional capital you have to add. Whatever the additional capital which is pumped in by the owners, you have to add it. So what you have to understand, this part will give you what? This part will give you the closing equity. So this is what we learn in sole trader. This part will give you closing equity. Okay. So closing asset is equals closing equity plus closing liability. So for this one, what you have to add? You have to add the closing liability. So now here see the formula, closing asset is equals opening equity plus net profit minus drawings plus additional capital, and finally you are adding the closing liability. So this entire part is what? This entire part is your closing equity. So closing equity plus closing liability, it is your closing asset. So this is also very important formula that you have to remember. Rather than remembering the formula, it is very important for you to understand how they have created this equation. That is very important. Now we will learn this equation. Net profit is equals assets minus opening capital plus drawings minus additional capital minus liability. So in order to explain this formula, I am going to use the previous formula that we have learned actually. Now I want to find this net profit. Okay. So what I am doing, I am keeping net profit one side, I am taking everything to other side. So you have the closing assets. I am taking this opening equity other side. So this plus opening equity, if you take it to other side, it will become a minus opening equity or capital, whatever it is. And I am going to find the net profit. If you take the minus drawings other side, it will become a plus drawings. If I take the plus additional capital other side, it will become a minus additional capital. And if I take this plus closing liability other side, it will become a minus closing liability. Is equal to what? Is equal to your net profit. Now you might wonder, so many methods are there to calculate the net profit, right? not only sales minus cost of sales, after that adding your whatever the other income, from that deducting all your expenses, from that method you can arrive at the net profit. That is not the only method. You have different methods to arrive at the net profit. Here see, how did we calculate the net profit here? Closing assets minus opening equity, assets minus opening capital, plus drawings, minus additional capital, minus closing liability, minus liability. So that's how we found the net profit in this particular equation. So as I said, you have to understand how we created these equations. The last equation that we are going to learn, it is closing net asset is equals opening net asset plus net profit minus drawings plus additional capital. Actually this is what we learn here. So this is opening capital plus net profit minus drawings plus additional capital is what? It is your closing equity. So for the closing net asset, there is another name that you can use. What is that? Closing equity. If not, there is another name that you can use. What is that? Closing capital. Everything is same. Closing net asset, closing equity, closing capital, everything is same. So how to find it? For the opening net assets, opening net assets, opening net asset means what? It is your opening equity. Another name that you can use for opening net asset, opening equity. If not, your opening capital. For that you have to add your whatever the net profits during the year. Net profits you have to add it minus the drawings, because drawings will reduce the ownership. Okay, plus whatever the additional capital. If they pumped in, if the owners pumped in more money, it will increase the equity plus additional capital. So this is what your closing net asset or closing equity or closing capital. All the names are same. So these are very important 6 equations that you should know when it comes to your final exam, because these areas are highly tested. So how you can understand these equations, understand the things properly and logically, and understand how they have created the equations. So if you understand how they have created the equation, these equations will be very easy for you. So I will give you a small trick to remember these equations. If you can take a separate paper and write the same equation for another 4 times in the same paper, likewise for each equation 4 times. So there are 6 equations, no? So if you write each equation 4 times, 24 times, 24 equations you will write. So if you can do like that, take equation number 1, write it 4 times. Take equation number 2, write it 4 times. With your understanding, don't write it for the sake of writing. With your understanding, write it. If you do like that, I am pretty sure you will be perfectly okay with these accounting equations. If not, we will call it as, I have named it as extended accounting equation.